All right, everybody, welcome to Afternoon Market Action. My name is Glenn, and his name is...
Patrick France.
Holy smokes, really? We got to go through this every week?
You said you were going to do the intro. I was looking up the Fed minutes.
Son of a gun, Sigh. It's okay. The
You're
Fed
really
minutes...
bad at intros.
I am. There's the Fed minutes. We're going to have the Fed minutes up, as a matter of fact, in a second. Welcome to Fed Day. Welcome to Afternoon Market Action. If you can hear us all. Did it already happen? 50 basis points by the Fed. It already happened. All right. So like the pink. Oh, we both have on the same color shirts. Oh, look at that.
We planned that. Totally planned that.
We look like twins, except for I'm the better looking one. Oh, man.
Debatable.
It's debatable. All right. So the Fed just did it, 50 basis points. Can we get that up, Joey? All right, Joey's going to put it up on the screen for you guys to see what's going on. By the way, if you can hear us, let us know. Type VV Nation in the room. Let us know that you can hear us and that we're coming across loud and clear. If you're brand new to the channel, right now is a good time for you guys to subscribe to the channel. Hit the bell icon so that you'll be alerted when new stuff comes out. Someone says they were looking at CNBC. Let's go look at Live Fed. There you go. There it is. Wednesday, May 4th. Finance. The press conference? Press conference, May 4th. Yep. You guys should be able to hear it. Oh, it's at 2:30. All right, it's at 2:30. So we already know that the Fed, I am in the theater watching Morbius. Really, Lito? Holy smokes. I mean, that's what you call some dedication. That's what you call some dedication. And the Fed, and we don't have to worry about a hike. Sigh. No, we can't do that.
Good book, by the way.
Is that a book, Patrick?
Yeah, In the Fed is Ron Paul's book from a while ago.
Okay. See, now Patrick's in my ear. It makes it a little better for him, for me to hear him. I like that. I am the only person here, says, is Morbius that boring that you're the only one in there? That's messed up. And are you in an AMC theater? Are you in an AMC theater? All right, so something should be on right now that we can watch, but the conference is going to be at 2:30. So the cool thing is that we know that the market went up. That the Fed raised rates to a half a point or 50 basis point. Let's go look at this VectorVest software, see what's going on there. And look at that. Patrick, you can see, right? You can see.
Yep.
Yeah, all of the major indices are up, but they're still not going up gangbusters.
They're holding off right now. They look like they took off for a second, but they're coming back down right now.
Yeah, I see that. MASH Luxury Transportation says, remember when Glenn sold Patrick's GME position in the Jockey Club? I was almost tempted to do it today. That thing is down. And I was going to go to Patrick and say, what do you want to do? So I'm not touching it. I'm going to let Patrick manage.
That's a smart move, Glenn.
I'm not worried about you getting in trouble with you.
Actually, if you sold it, then it's probably going to skyrocket after that. So,
but it's still sitting in one of our portfolios. Interesting. We do have a primary wave up today. No green lights, a lot of yellow lights. This is our traffic light into the market. A lot of yellow lights, a lot of caution today still. All right, but the markets look like they're trying to do, but the composite is still flat to slightly down. What's up, Kenneth from Gaucher? There he goes. The composite just went positive. I'm going to take a look at the VectorVest. Let's do this. Let's go to the market timing graph. Let's go look at live action. There's the Fed at 2 o'clock, and there's the bump up in the composite. Look at the most recent bar sitting right at 2 o'clock. I'm on 5-minute bars. All right, so 5-minute bars, the 2 o'clock bar, all the way up to 2:05, a little give back, and that's what Patrick said, that the market was pulling back a little bit, even after the big pop at the 2 o'clock, 50 basis points, pull back. The 3 and the 8 still are looking good. I think the market may have some rambunctiousness to still move higher. There was nothing that was surprising. All right. I think everybody was expecting about a 50 basis point. I was hoping for about a 75 basis point. But yeah, that's just me saying we got to really go after inflation. Patrick, what about you?
I mean, with all the news coming out, the first GDP or
Pull back?
first negative GDP quarter coming out,
Yeah.
I personally would like to see them focus more about just, figuring out what they're going to be doing for their balance sheet, more so than, maybe do a quarter of a percent and give the kind of guidance that, hey, we're going to be playing it by year. Basically, we're going to be, moving it around depending on what the conditions are. Um, it's going to be interesting. I have a feeling that the Fed's usually late to everything that they do. So, we're already starting to see potentially inflation starting to slow down a little bit.
Mhm.
If the Fed keeps ramping up, inflation starts going down, that's going to be an instant way to put us into a recession. So,
Yep.
um, I see them potentially starting to raise rates a little bit too late and then going too far. And then that causes even more economic issues than just having inflation is one of the issues that we're dealing with.
A couple of things. Adrian says too prudent interest rate. I agree with that, but the Fed has got it's trying to keep a balancing act right now of going after inflation by raising the interest rates, but without putting us into a recession. But just like Patrick said, if GDP shrinks for another quarter, that's the prelude to a recession.
Yeah, we're
Uh,
50% there to a recession already.
Absolutely. Ms. McClintock says the Fed taper is beginning. Patrick shared a website with me that shows that there's still like $9 trillion worth of bond stuff in the Fed's books.
Oh yeah, the assets. It's under the Fed's website, the fred.org, I believe it
Yep.
is.
And if that's the case, they ain't tapering. They were supposed to have been tapering since what, Patrick? December? Where they said
Well,
they were going to
so
start
by
tapering?
tapering though, they were slowing down
The
the
buying.
speed at which they were doing it. So they're still doing it. They're just not doing it as much quite yet.
So now
Um,
does it make sense to hold all that on the books and still raise interest rates at the same time?
yeah, because if you're the Fed, what you can do is, just let it roll off the books, instead of having to try to sell it or close it or do anything like that. Just let it like they did back last time they tried to raise rates, where they just let it, you know, go off their books and not try to do anything with it. So yeah, I mean, they definitely have the tools to be able to do that without taking a huge loss. Because if they try to sell it now, they're going to have to sell a lot of that stuff for a discount. They're going to be losing a lot of money on it. So the best thing is just, let it go to maturity and let it just fall off the books.
Look at the big bar you see on the graph right now.
Yep.
This is a 5-minute bar, keeping in mind. 5-minute bar, that's a big red bar. So we have the 2 o'clock time period. The market bounce. What do you think is causing this? That you think somebody said, oh my God, my hair's on fire. I gotta go, gotta go, gotta go.
No, I
I
just
don't know.
think, it's giving people time to go through the Fed minutes so far. I'm looking at it right now while we're talking, trying to find any insight, of what they're planning on doing for reducing the balance sheet. Because I think that's really the one big question still left. Everybody's expecting a rate hike. They didn't do any less than what everybody's expecting. So they came in on expectations on that. But now the big question comes of how they're going to be managing the balance sheet to reduce it like they say they're going to. Um, Unfortunately, I'm only on page 20 of 32, so I haven't gotten to anything about that so far in the minutes that I found. But I'm still looking for that right now.
And I'm pulling up on the Facebook side to see if I got anybody. There we go. I got some people watching us on Facebook. If anybody's got any comments on Facebook, put them in. We'll try to take a look at those as well. Neil says, is there anything to this notion of a housing bubble because of commercially bundled mortgage loans that are likely to default? I think I had seen a story that mortgage defaults were picking up. I think that it was too early to see that happening, unless I don't know why they would be going on yet. I know that the rates, mortgage rates have risen since we started raising the interest rates. Um, I did see a story that said that they are picking up. What's your insight on that, Patrick?
Yeah, so I was gonna actually send over an article that I found and talk and put another symbol that into the conversation here today. But it's a ultra short leveraged ETF on real estate.
Okay.
Um, it's kind of interesting. I know what they're talking about, the commercial mortgage-backed securities. Basically, that's the new big tool that a lot of these companies, a lot of big investment firms and banks are making money off of. And as always, the new tool is always the one that they say, oh, it's better than the last time. And then they do something different, and whatever that little difference is what causes the issues. With nobody going back into the late or nobody going back into work,
That's
you're
that's and
seeing,
that's big.
yeah, that's going to really affect, the commercial mortgage-backed securities. Uh, they're a little bit different from what I've read so far. They work a little bit differently than the standard, mortgage-backed security that we had in 2007, 2008. Um, just with the way that those commercial loans work.
Hmm.
So it could end up causing a lot of issues. But that's really been the main rise in what we've seen with the housing market. You look at prices and there are a lot of cash offers. I know, you know, looking at potentially buying a new home right now, if you try to sell your home, especially in this area, you'll sell it in less than probably 12 hours without
Absolutely.
having anybody take a look
That
at it,
that's still
accepting a cash
happening in
offer.
Charlotte area, and that's big time.
Yeah. And a lot of it is going into these, income generating properties, which are the commercial real estate. And so, yeah, that could definitely cause a pretty big issue for the major banks. I mean, you look at what happened to Zillow last quarter, where they lost a few $100 million, I think, because they were buying up houses and trying to flip them in certain, I think it was just in Phoenix, if I'm not mistaken. And they bought too many houses. They couldn't get rid of them. They ended up having to sell them for a loss. Well, that's just one small player. What happens when it's Bank of America or BlackRock or Wells Fargo? They're trying to sell a lot more because they have a lot more they can buy and sell. Well, all of a sudden they buy a lot more, then they have to sell them for a loss, and then those show up on their balance sheets, which gives you negative earnings. So,
Absolutely. All right.
uh, yeah, it's going to be interesting. I'm definitely keeping an eye on the commercial mortgage-backed securities and that whole story as it develops. But yeah, it's definitely going to be interesting to see how that plays out, over the next 12 to 18 months.
Interesting. Miss McClintock says Fed balance sheet to decline by billions to reduce the balance sheet November 1st been talked about for over a year now. I thought that the tapering is one thing, but I guess then that's where my disconnect was. The tapering was one thing, but holding the bonds on the balance sheet was another thing, and they still are holding a lot. They're still holding a lot. So Neil
So,
says Zillow times 1,000 is what this is looking like. Wow. Okay.
and that's one of the things, going into it, the balance sheet and what they're going to be doing with that is, are they going to be able to make the same transitions they did before, or are they not? Are they going to continue to, try to figure out what they're going to do? Or if they hold them on their books, yeah, they're going to be underwater because interest rates are moving up.
Mm-hmm.
But if they try to sell them, then they take a loss. And to quote Wall Street Bets, it's not a loss until you sell. So, are they going to let those go to maturity? That way they don't end up having to write off a loss, or are they just going to try to sell it and take the loss on their balance sheets?
So now this becomes another balancing act.
Yep.
Uh-huh. Mass Luxury Transportation says if we get 200 likes, Glenn will do a 4-minute color guard through May. That ain't gonna happen. that just ain't gonna happen. Can these interest rates affect oil pricing? I think it's not the interest rates, in my opinion, that affect the oil prices. It's just the oil inventory that affects the oil prices and being able to supply the demand. Oil prices are still rising because our inventories are shrinking. And it was interesting the week that we said that we found X amount of barrels. I was like, where the flip did we just find oil? Where did we just found it? But our inventories are down. that's going to keep prices of oil higher. I don't think you get around that unless, what's going to bring oil prices down, and nobody take this down a political path. We need to drill more. All right. And I did see an article that the president was thinking about opening up some of these leases for people to drill more. It was talked about. Nothing has happened yet, but that's how you're going to get oil prices down. So, Stephanie, I don't think it's the interest rates that are affecting the oil prices. It's oil supply that's affecting oil prices. Patrick?
I agree with you. I think, but it can affect it indirectly, not directly.
Okay.
But indirectly, if interest rates are going up, the economy starts slowing down, people or businesses are going to be using less, they're going to be producing less to try to balance that. And that's going to drive demand down more on oil. So especially you look at China. China's a great example. They're slowing down on the economy from rolling lockdowns they're doing, and oil markets have started pulling back off of that news because they're not using as much oil right now. Now, granted, that's a little bit different of a situation because they're doing lockdowns, but same situation. The economy slows down, they use less oil. All of a sudden, price of oil goes down. So, I think indirectly it could definitely affect the price, but to do that, you'd have to do a correlation, a whole lot of statistics that I don't think you and I are going to do right now.
Yeah, it's not like we ain't going to do it, but I'm not an economist, dude. I can't do that.
I could do it if I had the right tools, but I don't. That sounds like a headache to me.
I'm not going to even say that I know how to try to do that. Kevin, what did I say? I said no politics. No politics. I already made the point clear that we needed to drill more. All right, and I'm going to leave it just right there. All right, so I'm still watching the market. Actually, it's not me anymore on Wednesdays.
Yeah, it's kind of consolidating right now.
Yeah, it is. All right, so here's the 2 o'clock time period. We are the 3 and the 8 on 5-minute bars. Just slow down a little bit. Why Fed even dropped the interest rate so low at first, and now they have to increase? Because when they did come into the game, they said, well, we got this. We don't need to drop it low until inflation number came out, and we're at the highest inflation we've been in the last 40 or 50 years. And then they said, holy camoles, bro, we got to do a little bit more. I think we got a 50 basis points here. And somebody pointed that the next one might be a 75 basis point. I don't disagree with that. I still am of the feeling that we do get a 100 basis point raise before the end of the year. Now, you guys may think I'm crazy to say that, and that's fine. And Patrick may even think that I am crazy to say that. But I think if you're going to really try to get hot and heavy into really pulling inflation down, you got to be all in. And I don't know if the Fed is all in. I think that they're in to placate people. Look at that big bar happening again. I think they're in to the point to placate people because inflation is going to be an issue come midterms. There's no ifs, ands, or buts about it. And then, you can poll it. That's a big issue from a market perspective, from an economy perspective. That's going to be hot and heavy on people's minds. So the Fed is trying to do what it can do, but at some point in time, man, you got to stop kicking the can down the road. All right. So, go ahead. What was you finna say?
If they're going to do it a full 100 basis points, it's going to be, at the end of the year after elections, not before that. Because if they do that, it's going to crash the markets. We're going to see the market.
I agree. So I'm, my thinking is, I think that the recession hits, not if it hits. I think it's a when it hits. I just did a video that showed that pretty much prior to any recession came from a result of monetary policy.
Yep.
Right. And that's what we just gone. So I don't think that it's if it happens. I think it's when it happens. And I still think that I'm with you. that 100 basis points, if that really does happen, doesn't happen until after the midterms. Doesn't happen until after the midterms. And I think that 2023 is going to be poopy. It's going to, that's also what I think. All right, Joey is pulling up. Is it 2:20? Oh, we got 10 minutes before the Fed thingy. What you call it? The Fed conference. All right, so this is what we'll do. The market looks like it's poopy. The market's getting poopier. I think what we'll do prior to the Fed coming on, we're going to talk about some stocks that we were, wanted to bring. Man, it's almost hard to pull away to do that, Patrick. Look at the market.
We got some time.
Okay.
Things are only going to get more interesting for the day.
All right, so we got about 9 minutes. We got about 9 minutes, and we're going to talk about some of the stocks that we set up aside for you guys. Can I go? All right, some stocks that we had to decide. And we're going to start with Patrick's picks today. All right.
Of course, we're going to start with mine. Start with the best.
All right. Yeah, all yours look good. All mine look like poop. All right, let's go back to here. Generac was one of your stocks. Go ahead, talk about it.
Yeah, so Generac is one I've looked at for quite a long time. I've talked about it in some of our hot stock panels. I've even owned it in the Jockey Club portfolio for a while. The company's been getting hit a little bit with the overall market. No surprise there, just like everything else. But once again, from a financial standpoint, from a fundamental standpoint, this thing continues to make money. I even noticed, Generac ads coming up on different social media sites. Okay. But yeah, big earnings announcement here today, big earnings beat here today, I should say. Coming in first quarter earnings of $2.09 a share, where the expectation was $1.92. Revenue also came in slightly better than expected by about $500 million right there, or excuse me, $500 million right there. Can't scroll down anymore. Oh, I don't have. Hold on. There we go.
Hold on. You got control? Allow.
Yep.
And before you go on, I want Jazz.
Oh, it took that off.
Oh, what it did?
I was able to see the whole thing earlier, but it's not allowing you right now.
Okay.
But yeah, basically, they had really good expectations or really good earnings. They have really good forward guidance. The company's making money. They're in a good area in the market. And, with today's movement, that could definitely help it and, get it back on track. So even with the higher interest rates, all of that, they're still making money. The company has a really good balance sheet, really strong ratings from VectorVest. So yeah, definitely one to keep on our radar. I like what we're seeing with this one from a fundamental standpoint. Look for an opportunity to buy on a reversal. Look for a reversal, and could be a good entry here in the near future.
Excellent. Before you go on, Jazz Bedile says we're in a recession. We ain't in a recession. We may
Not quite.
We may be in a bearish run, but we ain't in a recession yet. That ain't happening. Not everything has been hit in order for us to be in a recession.
We're 50% there.
Yeah, we're not in a recession, but I wanted to bring. Now, that doesn't mean that we're not in a bearish feel in the market. And I think that a lot of the indices are in correction territory, but we are not in a recession not yet. All right. What else is yours? This one.
Yeah. So most of my stories here today are just earnings related. Okay. Super Micros, one coming from the tech sector, been beaten up pretty bad, but once again, great earnings, beating expectations, giving really good forward guidance. So yeah, I like what we're seeing out of these. If you're worried about what's going on, if you're worried about the current economy and all that, the best way to keep yourself protected if you're still wanting to be long is to look for really fundamentally sound companies. The speculative and aggressive stocks are going to be the ones that people are over leveraged in, and those are going to be the ones that tend to sell off the most. So, we're finally seeing, the tires meeting the road here a little bit, where we're finally seeing everything coming back down.
The right way to say it is when the rubber meets the road.
Rubber meets the road. Whatever.
Rubber meets the road. Okay, I'm trying to help you.
But yeah, we're seeing, positive earnings. We're seeing really strong performances on a fundamental standpoint. So, wanted to bring some ideas to the table to keep on people's radars. If you're looking for fundamentally sound companies that aren't speculative and aggressive, these are going to be some plays here for you.
Excellent. And you got this one too, AMD.
Yep. Another earnings beat. Grew 71% year over year. Absolutely astonishing there.
You have control if you want to point out stuff.
Oh, okay. Finally got control here. Not really too much to report. Obviously, people can gain access to this. Go take a look. But beat on earnings, beat on estimates, gave good forward guidance. And everybody's been worried about the chip shortage, and so keeping an eye on AMD, Supermicro, these types of companies can help us maybe gain some insight on when we think or when we can start seeing some positive signs coming back into the semis. The semis here. So definitely some just to keep on our radar. Solid fundamentals, good forward guidance, beating expectations. So 3 different picks to keep on our radar and look for potential, technical entries for a reversal here.
All right. I'm going to go through mine real quick. Palantir, I've been a big fan of Palantir. They are a data gathering, data management company. They get contracts hand over fist. It is still a speculative play. I still think it's a speculative play because people truly don't understand what they do. They have contracts with our governments for the purposes of trying to find terroristic activity. What's viable, what's not viable, and getting actionable data on them. So their technology is well sought out across the world because more and more companies are picking up contracts to help them become better in managing their data and utilizing their data to the best to their best potential. So I still love Palantir, but I'm telling you that it is a speculative play. Neo, well, I'm on the electric vehicle space. I like that as well. Neo marks the production of its 200,000 vehicles. That's a lot of vehicles.
Now, we talked about this last time or the time before already.
Well, this is, interesting. I was looking at the story. It was like a yesterday story. All right. So it was interesting. This is a different article, different blah, blah, blah. So
took him a few days to copy and paste from the original.
Something, I think that's exactly what it did. Wow. What sent micro soaring higher today? I think Patrick was talking about, I think it was an earnings play. Was it not? It was an earnings play that pushed it up.
And actually, once we go take a look at the graphs, we can talk a little bit more about it. But
okay, we're gonna do that after the Fed minutes stuffy or conference. Stuffy. And I had another one. What was my other one?
Extra.
Where is it?
Right in the middle.
Oh, there it is. All right. Why didn't you plug it in over there? Oh, because Joey didn't want to be showing his face. I would have helped you out. I hope it doesn't work. That's right. So Joey is here in person. So this was big news. I don't know how many of you, along with us, are playing XRO. A lot of people in our education department here are playing XRO. Big news. Energy, are you here? I didn't see him. XRO Technologies enters a strategic multi-year agreement with Vicinity Motor and their power coils. This is a big step for them. It jumped up nicely, and then it pulled back today. And something that now they're entering into the space of other companies. They've got the coil drivers, but now they need the companies to put the coil drivers in. Vicinity Motors, they did it in motorcycles as well, and now Vicinity Motors. And I think this is just a bigger step for them going forward. Again, another speculative plays. My plays were a lot more speculative than Patrick's plays today. All right, so we're not going to look at the graphs yet. I want to start to hear what the Fed's got to say. We're going to bring them on. Patrick, what's your name? Joey is going to bring them on to the screen. When it comes on, it's going to happen in like, there it is. There it is. It's coming up. Now they should be able to hear what's going on, right? All right. Hopefully you will be. We're going to listen, and then we'll give commentary along the way. I don't hear anything. Cause ain't nobody there. How am I supposed to hear something? Holy smokes.
They're fashionably late, man.
Move my cup. It's like, hey, do you hear Casper the Friendly Ghost? No, he's a ghost. What else do I need to move? Okay.
Yeah, I mean, they could be coming out in a few minutes. Seems to be fashionably late here.
I don't know why they do that. I saw. No, you didn't, Adrian. You didn't see Joey behind me. He was there he is. Here he comes.
No standing ovations?
Good afternoon.
No, I can hear
Nice
him.
to see everyone in person.
I can.
First time in a couple of years. Before I go into the details of today's meeting, I'd like to take this opportunity to speak directly to the American people.
Wants to speak directly to
Inflation
American people.
is much too high, and we
Inflation's too
understand the
high.
hardship it is causing, and we're
Understand the
moving
hardship.
expeditiously to bring it back down.
Moving expeditiously.
We have both the
to bring-
tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses.
There we go.
Okay.
The economy and the country have been through a lot over the past 2 years and have proved resilient.
Wow.
It is
Just
essential
seeing
that we
them
bring
drop
inflation
markets.
down if we are to have a sustained period of strong labor market conditions that benefit all.
This is why he's got to be more hawkish.
From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight and
Can
inflation
you guys
is much
hear it?
too high.
Yes or no?
Yeah, they should be
Against
able to
this
hear it.
backdrop, today the FOMC raised its policy interest rate by a half percentage point and anticipates that ongoing increases in the target rate for the federal funds rate will be appropriate. In addition, we are beginning the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. After expanding at a robust 5.5% pace last year, overall economic activity edged down in the first quarter. Underlying momentum remains strong, however, as the decline largely reflected swings in inventories and net exports, two volatile categories whose movements last quarter likely carry little signal for future growth. Indeed, household spending and business fixed investment continued to expand briskly. The labor market has continued to strengthen and is extremely tight. Over the first 3 months of the year, employment rose by nearly 1.7 million jobs. In March, the unemployment rate hit a post-pandemic and near 5-decade low of 3.6%. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. Employers are having difficulties filling job openings, and wages are rising at the fastest pace in many years. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 6.6%. Excluding the volatile food and energy categories, core PCE prices rose 5.2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. Disruptions to supply have been larger and longer lasting than anticipated, and price pressures have spread to a broader range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well. Russia's invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine. Our job is to consider the implications for the U.S. economy, which remain highly uncertain. In addition to the effects on inflation, the invasion and related events are likely to restrain economic activity abroad and further disrupt supply chains, creating spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to restoring price stability. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by a 0.5 percentage point and stated that it anticipates that ongoing increases in the target range will be appropriate. We also decided to begin the process of reducing the size of our balance sheet, which will play an important role in firming the stance of monetary policy. We are on a path to move our policy rate expeditiously to more normal levels. Assuming that economic and financial conditions evolve in line with expectations, there is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings. We'll make our decisions meeting by meeting as we learn from incoming data and the evolving outlook for the economy. And we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal.
2% goal, which is poopy.
With regard to our balance sheet, we also issued our specific plans for reducing our securities holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner by allowing the principal payments from our securities holdings to roll off the balance sheet up to monthly cap amounts.
That's what you said, Patrick.
Yep.
For Treasury securities, the cap will be $30 billion per month for 3 months and will then increase to $60 billion per month. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap amount. Our balance sheet decisions are guided by our maximum employment and price stability goals, and in that regard, we'll be prepared to adjust any of the details of our approach in light of economic and financial developments. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks. The committee is determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, Joey, I just want to mute him. Bring back up the software.
You know what that just sounded like to me?
Blah, 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 blah.
Well, not only that, but hey, I got a flat tire. How do I fix it? Let's start by changing out the battery. Like,
wow. Wow. Somebody said, Kirby says, Glenn, ask Powell a question. He ain't listening to me. Oh my gosh. That was awesome, Patrick. I got a flat tire. Let's go check the battery. Wow.
I mean, but literally, that's what he just said. He said, you know, there's inflation because of supply chain issues. So what are we going to do? Raise interest rates that don't fix the supply chain issues, that just going to screw up housing markets. Interest rates are going to mainly affect the housing markets and, you know, cost to borrow for companies.
Absolutely.
Not the supply chain issue.
And that's another whole issue in and of itself that we have no control over. He can't control that either. None of us can, given the situations that's
going out to the docks and start unloading stuff off of cargo ships then. That'll be more effective than raising rates right now.
Wow. So notes that I took. He came out and said inflation's too high. Well, duh. All right. Retail spending still strong. So people are still spending money. So the economy is still doing good. All right. The economy is still going good. Kirby wants to hear the Q&A. All right. I'm going to take a poll real quick. All you guys in here, would you rather us give our insights on what he said, or would you rather hear the Q&A? 1, if you want to hear our insights. 2, if you want to hear the Q&A. All right.
Sorry there,
listen,
Mark.
Mark, I'm putting it out there. 1, if you want our insights. 2, if you want the Q&A. Kirby, you're going to probably be the only one. I got 2. I got more 1s than 2s, folks.
Got a lot more 1s and 2s.
All right. So, Kirby, as much as I love you to death, I'm gonna give our and you guys can still go if you want to listen to what the Fed Q&A is. You can go do that if you want to. I totally understand if you want to do that. All right, but we're trying to going off the notes that I got. I want to see what both Patrick and I have going on. So, retail spending still strong. If retail spending is still strong, the economy still is going up. Is it effective? Do you effectively still raise interest rates? Now, last one was 0.25%. This one was 0.5%. And then he still said 50 basis points looks like it's going to be the ongoing goal going forward into the foreseeable future. So we're going to keep going at the 50 basis points, even though he did say that 1, spending was still strong. 2, jobs unemployment was low. 3, the labor demand is strong, but the supply is screwing it all up. So, Patrick, what do you got to say about those things right there? As he's bumped it up to 50 basis points, and it looks like he's going to keep it there for the foreseeable future.
I mean, the only way retail and average Americans going to be able to continue to have strong spending is with the increase in salaries and increase in pay. Luckily we're seeing that, but there's a lot of jobs that are out there that people aren't taking. It's going to come down to companies are going to have to finally give up some of their profits to keep things going. If they don't, then, I mean, you can't have the average American, keeping the whole economy propped up. It's not going to last long.
So it's interesting, as in he did say something right, but he didn't give the whole truth. He said that wages are rising, and they have been higher than they have been in a lot of years. That's true. But with the jacked up inflation, wages are not keeping up with inflation. So you're telling us one side of it, that wages are going higher. They are. People at McDonald's are making $15 an hour. People at McDonald's are getting a $500 to $1,000 bonus, sign-on bonus. Where did you ever see that coming out of the woodwork that would ever happen?
Yep.
But we're there. I'll take that. We're there. Wages are going higher. But inflation is outpacing wages. So yeah, wages are going higher, but people, and Patrick is right. How are you going to live? We're living now, a lot of lower class, and I hate to put classes, but it is what it is, are living almost paycheck to paycheck now. Not even paycheck to paycheck, but almost paycheck to paycheck, even with a wage increase because inflation is so jacked up. I'm just saying.
And I mean, we talked about it a couple weeks ago where we were talking about ways companies are enticing to try to keep people actually at their jobs, because I think it's the younger crowd, millennials, whatever you want to call us, the younger job or younger labor market. We're not sticking around at one company for 10 plus years typically.
How long have you been at VectorVest?
I've been at VectorVest 11 years.
I've been at VectorVest for 18 years. Those numbers of people, those numbers that you just heard are very rarely heard staying with any company nowadays.
But you and I want you to know, are rare exceptions, because most people, when they get a job, they get a pay raise, then they go to another employer, they say, this is my current pay, and then all of a sudden they get a 20% pay raise that way. No company is going to give your employees 20% pay raises. So what do we have to do? We have to go to other places and get it that way. So you're going to have people jumping around in the labor markets, and to be able to, handle the inflation, to be able to handle the extra cost of things.
Are you watching the screen?
Yep.
Look at that big 5-minute bar.
Yeah.
Holy smoke. A lot of stuff going on right there. You thinking that people are digesting and going, oh, he's making me feel warm and fuzzy all over?
I mean, I think it's more of, he gave us exactly what they've been broadcasting for the since their last meeting. So I think there's no new curveballs thrown in. So yeah, markets start to rally from here because what we just heard has already been baked in my opinion.
Okay.
There wasn't anything new that hasn't been baked in. So yeah, we see the market starting to rally for at least the short term. Now, longer term, who knows? But at least the short term for now.
Absolutely. So let's go to the homepage real quick. All of the major indices. Now the Dow is up 1%. The S&P 100 and 500 are pushing 1%. The composite up 0.2, and the NASDAQ. Noticing that the tech stocks are the laggards today.
Yep.
The tech stocks are the laggard today. So what else do I want to do? Let's go see industries. Where's the money going today so far? Petroleum up 2.5%. Petroleum pushing 3%. Sector energy pushing almost pushing 3% as well. The money is going into oil. The money is going into energy. The money is, and that's what we see right now. But interesting, we look at the advance to declines on the over 9,000 stocks that we track. Still a little bit, tad bit more stocks going down than going up across the board. I like that. Sonny says the market is saying whatever. And it sort of kind of is, Sonny. You're not off. You're not off. Jennifer says, I'm done listening to the Fed, rather listen to y'all. That's awesome. Thank you. All right. So hold on. If you think the commentary that we're giving today is at least decent information, hit the like button. If you haven't already, share this live stream right now. Share it. Let them know that they can get some good quality information on what's going on. Maria says, I fully agree with you, Patrick, about millennials and not settling. I see that in my kids. Do you also know that the millennials, if you think about it, this is the first adversity, to so to speak, in the market that they've seen? You agree with that, Patrick? Yes or no?
The most what?
Adversity in the market? Like big adversity in the market?
We've been dealing with adversity the whole time. That's why we've been living with our parents until we're 35.
I didn't do that. I wasn't do that. I hear you. When I say adversity, I'm thinking about not COVID. All right. And you know something? The government did with everything that they could to keep us from going into a really bad recession / depression.
By doubling the money supply?
Yep, and printing money. Absolutely. If that's what they thought that they needed to do, well, they did it, and here we are. All right? And I think that they had to know, now the advances are outpacing the decliners, but I think they had to know that you were kicking the can down the road with putting all of this stimulus, knowing that the product was going to be inflation. They knew it. They had to know it. There's no way that you're going to put money into an economy, let the economy get hot, let it run, prices are going to automatically go up. That's what's going to happen in a booming economy. But you needed to come in and say, okay, enough is enough. Let's pull back a little bit and let's start cooling down this economy. But it was the jobs market that was keeping them, for the most part, from reacting earlier, but they should have known better.
But once again, though, how did interest rates slow down the cost of goods due to supply chain issues?
And it doesn't. What they're doing. So tell me, what other tools do they have to go up
the overall market? They're screwing up the overall market to fix an unrelated issue.
So how else do they go after inflation? What else do you do?
You start working on supply chains and you start putting man hours and manpower behind it. You start unloading all these, bulk ships that you see off the coast and start getting these goods actually on the shelves of places.
So if it's that easy, why ain't we done it? I'm asking the question. If it's just that easy, ain't nobody come to me and say, yo, Glenn, you want to help us out and go? Because I would have said, hell no anyway. But
because right now there's a lot of red tape, it seems like, due to COVID and the restrictions on that. That slows down the process. People have to go through checks. They have to take, 5 different nose tests. They have to do all this different stuff. Just get back on with it. Like, if you're worried about it, stay home, wear your mask, whatever. But if you're not, start working.
So one of the things to help with inflation, and I agree, because one of the biggest pieces of our inflation is rising oil. That's one of the bigger. So you want to, and that's something we can do here within our own confines is reduce restrictions on oil production. I don't disagree with that.
And what about
And
bringing just other production back? It's not just oil, bring other production back. That way, if you take control of your supply chain, we've had over a year and a half now of dealing with supply chain issues. At some point, you got to say, okay, well, these could potentially happen in the future. Maybe I shouldn't be doing 99% of my production overseas and then have to worry about, bringing them back into the United States.
well,
This is the largest economy in the world. Start producing it here. And that way you don't have to worry about it. Bring the supply chain closer. Manage that supply chain better.
well, one of the biggest issues we've had is with chips. Where did the chips come from? Do any chips come from the U.S.?
Apple's starting to work on their own chips in the U.S., I think, if I'm not mistaken.
Starting to work is a different story than.
But they've been working on that for a while, so I think they're actually starting to do it for their higher end computers and stuff.
Truckers now paid $120,000. Is that true? Joey put that up. Is $120,000 by Walmart? Truckers are.
I mean, dude, trucking is not an easy job. You're sitting in a chair for at least 8 hours at a time. That does a lot of damage to your body. That's not an easy job. I know it's just driving, but
no, the bad thing for me is if I'm driving for more than like 20 minutes straight, I'm about to fall asleep. So, yep, I can't be a trucker.
And you're not allowed to drive after 5 anyways because it gets dark, are you? I thought you have to have your chauffeur drive you.
Dude, I will come over. That's not even that funny, Joey. That's not even funny. Joey just cracked up with a belly laugh. I'm going to come over there and I'm going to fight you again. Today's another day when I'm going to come over there and I'm going to fight you. Holy smokes. Now, somebody did say 110. So Joey looked it up. There was something I saw. Lee says, disagree with pumping money in the system that caused inflation. Lee, you have a better answer than that? Or let me ask Patrick, is there a better answer than that? That the money being pumped into the economy didn't cause inflation?
Well, so I think yes and no.
Okay.
But a lot of it doesn't come from the Fed themselves. A lot of it comes from policy and the quick stimulus and the quick bills that were passed to get that stimulus through. There's a lot of handouts and a lot of excess money that's going to people that didn't even need it, going to companies that didn't even need it. And there's no oversight committee on it. I forget the exact numbers, but the vast majority of the checks that everybody got, the stimulus checks, was a small percentage of what was actually in the bill. It's a very, very small percentage of what actually went out in the bill. How much money was used.
So where's the rest of the money?
Banks, companies.
Okay.
They took out their PPP loans. There's story after story of abuses from that. I think there was it was done so quickly to try to make people happy that there was a lot of stuff just thrown into it, with lobbying and all that now the average American is having to pay for. We are not seeing the benefits of it. That's helped keep companies' balance sheets looking good. They were borrowing money. They were getting free money for zero interest and then able to invest it, made killings off of it in the market, especially after the rebound we saw after the COVID crash. So yeah, of course there's going to be inflation, but it's just really poor management and no oversight that was put in place, and just straight up abusing the system that was there. And they got it passed by dangling a $600 check in front of people.
And something, there's no doubt in my mind that a lot of people abused it. But that happens with every government program that we have, is that people will find a way to abuse it.
But this one was done a lot more and a lot quicker. So there was no checks. There was no, agreeance upon it in the public. It was just shoved through real quick. Right, Nobody really knew what was going on in the bill. And now we're finding out even new stuff to this day.
Because of COVID, do you not think that we should have given some stimulus to people, yes or no?
I think the stimulus should have been pulled back a lot. Stimulus to the people, yes, that's fine.
Okay.
But the extra loans that got put out to these mega corporations and all that, no, I don't think any of that needed to be in there. The new regulations that they're coming out with on, trying to tax people's uh, personal income that they get through, these apps like PayPal and those, no, that doesn't, all that stuff did not need to be in there, but it is. There's a lot of restrictions. I know one of the easiest ones was the e-cigarette business. There was a lot of new restrictions thrown in that. Nobody even knew that was going to be coming out until all of a sudden it came due. So yeah, there was so much thrown into those bills that the average American has no idea about, and we're still not going to even know until probably 9-10 years down the road
All
when
right.
all of
So
it's finally realized.
I got a comment. A comment said, Sonny, stimulus to Main Street goes directly back into the economy, unlike bailing out banks. So what you were just saying in regards to stimulus, it should have stayed with us, and that's it. It should have
And
just
that
stayed.
should have been it. That should have been all the amount of money that needed to be printed.
All right. So now there's another thing. That whole PPP thing, companies were getting affected because businesses were, business was slowing down. You don't think we should have given businesses money? Or let me back that up a little bit. Should the companies that got those loans been vetted a little bit more to determine whether or not they needed that money or not?
They should have been vetted more.
Okay.
But I don't think I think instead of PPP, they should have, there's already a loan place. There's already places to get loans out there. You know, if you want to cut interest rates down to what they were at 0%, and then give out loans, actual loans that have, that everybody's familiar with. They know typically the maturity, the rates, all of that. They know what they're getting. Don't create this new PPP loan and just shove them out there because, I mean, nobody knew who was able to sign up for it. Nobody knew, if they were eligible or not. But
I
banks
think that
sure
it was
did, and
going
banks
out.
sure took advantage of it.
I think it was going out
major
to companies who were experiencing hardships because of COVID. And if you were experiencing hardships, you were able to apply for these loans.
But anybody could just say they're experiencing hardships and they didn't have to have any proof to back it up or anything to show for it.
So thus, we should have had a better vetting system to see which companies really, really needed it rather than just giving it out. Still goes back to that, yes?
Yeah.
All right. Lee, in regards to the inflation and the putting the money into the economy or putting money out there, anytime you get an increase in the amount of money compared to the amount of goods and services, that's money buys, you're going to get an increase in the price level, what we call inflation. So the increase of money compared to the goods and services. When we started putting out this money, were the goods and services there? Yes or no? And I'll ask you that, Patrick. When
What
we
do you
started,
mean?
so I'm looking at Lee's. Can you see that? He can't.
Yeah, I can see it.
All right. Anytime you get an increase in the amount of money compared to the amount of goods and services that money buys, you're going to get an increase in the price level. So we put money into the economy. We gave stimulus and all of those things. That, in regards to what was spent, is the increase in price level. So if that's what I'm reading right, it still is the amount of money that was put into.
Well, yeah, if you increase the supply of cash available out there or
Right.
money available out there, that's going to cheapen the dollar, which therefore it takes more dollars to buy something at X price. So yeah, you're going to cause inflation that way. But if you look at the numbers from the Fed website, they essentially doubled our money supply in a 1-year period or 12 to 24 month period. So yeah, we're going to see exceedingly high inflation, which, I mean, we've already seen kind of the numbers from there, but a lot of it, I mean, you could have reduced how much exposure and how much potential inflation you could come across by not doubling the money supply, by only printing a certain amount that, would cover every American for that stimulus check.
Interesting. Very interesting. Two comments between Kevin and Mark. There were people staying home on temporary layoff that were making more than people that were working. What interesting.
Yeah. So speaking of that, to Kevin's comment there, a good buddy of mine, he was a manager at some restaurant around the area, quit his job because they were about to lay off people anyways, and decided to quit his job, take the unemployment, and was making more than he was at his current employment.
A
And
lot of people were in the same boat, Patrick. A lot of people
used that to, take the certifications he needed to get into a brand new field. I'm not going to say what, because I don't want to try to put too much information about personal stuff, but I mean, it's an expensive field to get into. You have to have a lot of training for, and the training isn't cheap. And his unemployment covered all of that plus a lot more. He was almost making twice the amount on unemployment than he was at his employer.
And a lot of people left work because they could get a lot more in unemployment.
Yeah.
Because that was also stimulus, right? Oh, we're going to raise what you get for this amount of time. And people were like, holy smokes, let me go get some of that. And if I want to say gaming the system, or were they being studious in saying, I'm going to take this money and do this? I'm not going to call that gaming the system.
I think you keep a regular loan the way it is. Don't create this brand new loan that could be abused. You keep the loan process the way it is and have companies take a loan. Lower the interest rate. All right, so interest rates on these loans are pretty much zero. And it fixes the issue, still gives the company the money that they need to keep running for the time being, but it gets paid back like a normal loan, and you can track it. You have, all the documentation for it. There you go. Problem solved.
Hey, Maria, I'm not getting into the IRS. That's another story for another time.
But, you were talking about the European economy. One interesting thing is, we are raising rates, and we had inflation. If you look at the EU, the European economy, that may be the biggest disconnect I've seen in quite some time. They still have negative interest rates, and they haven't raised rates as far as I'm aware of, or not very much if they have.
I posted something on Twitter that I think it was Australia they raised interest rates.
Australia did, but the EU has been Australia hasn't been in negative interest rate.
You did say EU. Okay, you did say that.
Yeah. The EU has been, because they were one of the first. Them and Japan had negative interest rates for the longest time, and I still believe they have negative interest rates, if I'm not mistaken. Plus, they have inflation at pretty much what the Fed said, around 6 to 7%. So that's going to be really interesting. That may be the biggest disconnect that we've seen from a central banker right now.
Interesting. All right. We're at 3:00. The market just took off like a bat out of Hades. Yes. Look at the homepage. Everything is up over 1%. The S&P 100 was up just at 2%. Everything is rocking. The advanced declines, everything. So people are just digesting. And evidently, he must be answering questions in the Q&A that people are going, oh, fuzzy wuzzy woo woo. I think that's what they. Go ahead, Patrick. Say it with me. Oh, fuzzy wuzzy woo woo. Okay, he won't say it.
I'm gonna let you do that one.
All right, fine. All right, so this is what we're gonna do before we go. We're gonna go to the viewers. Let's go look at Patrick's. He talked about his stocks. Let's go look at their graphs. I'm thinking that these graphs are gonna freaking look good today. Going up. There's SMI. Look at that. I'm going to put them on a 3-month graph. You got control if you want.
Yeah, so that's what I want to show.
Okay.
This is something I talk about from time to time, and it's a chart pattern I learned from the wishingwealthblog.com the guy by the name of Dr. Wish. It's a green line breakout. What it is essentially the stock's moving sideways or, moving flat over the course of a year. And then all of a sudden gaps up to a new 1-year high. And that's exactly what happened today on SMCI. Plus you have really strong volumes. So this is a green line breakout. We've seen it with a lot of big names. I've seen a lot of examples of this, and they can be extremely profitable. Not only is this company making money, they're making money for 4 consecutive quarters. They gave really good forward guidance. As long as it stays above the low of today, that's a good opportunity to jump on board for long-term play or longer-term play, to make really, really good gains on. So I like the setup on that one here.
You can go to the next one.
Alrighty. Where are we at?
Right there.
AMD. So AMD, really strong buying pressure coming in off those lows. 3 and the 8 turning positive. You do have some resistance at that $100 mark. But where's MACD? Let's go ahead and get MACD on here.
Kevin says, "Here's my cup and handle." Is this a cup and handle?
On SMCI probably.
Was it
Maybe
on
you're referring to?
SMCI? I don't know. I couldn't see it. I can't see a cup and handle.
But with AMD though, the MACD is still in negative territory, but on a short-term basis, you're seeing momentum picking up over the last 2 days, plus volume increasing. Good, fundamentally sound play from that. Let's go SMCI back up here. I guess you could call that, usually it's not a gap that creates that handle or that creates the run up to the handle. And usually it's almost a double top essentially, but I guess you could call it, I mean, we may have to zoom out some to see it.
If that's a cup, that's an ugly cup. I wouldn't drink out that cup. That's an ugly cup.
I'm not going to say what this pattern is called, but you could probably get a good visual of it.
Oh, see, I don't even know what. I'm not listening. I'm not even looking anymore. Go to the next stock because I don't even want to look. I don't want to look. Oh, sigh. All right.
Then Generac, I like what I'm seeing here. It's blurry. Well, Kevin, you can look it up on your own computer.
I'm not looking.
Then Generac, once again, beaten up in the overall market. I've been keeping an eye on it for quite some time. Solid fundamentals on a short-term basis. I like what we're seeing. 3 and the 8 after the positive earnings today. 3 and the 8 turned positive. Also, the MACD on a short-term basis just turned positive as well. The histogram just turned positive. So on a short-term technical basis, I like what we're seeing. Strong volume, positive movement, closing to the highs of the day or close to, if it closes out right now, it's closing at the highs for the day.
Yeah.
Solid fundamentals. Yeah, I like what we're seeing with this one as well.
So interesting. Mark Johnson says, Powell said he think we can get inflation under control without a recession. I don't think so. Homie, don't play that. I had to take us back in time. I don't think so. I think you're going to, I just don't think so. I think that Cafe Bustelo cup. No, I got Cafe Bustelo in here. All right, but I don't think so. I think because they came late and they're trying to go after inflation now for the foreseeable future of 50 basis points, I don't think so. I think you can't rein it in fast enough.
I mean, or they just finally, the Fed members all start buying back in really dirt cheap SPY calls and QQQ calls.
Right. And yeah, Cafe Bustelo is pricey, but I want to try it, says Alex on Facebook. And let me tell you something. This is some of the goodest coffee ever. It's not, I don't know. I get it from my boy Kirby. Kirby's here. He takes care of me and my Cafe Bustelo. I don't know if I need to put an order in soon. I might. Kirby, I love Kirby to death. I love him. But he supplies my Cafe Bustelo. He's in that business. Best sector right now. All right, so let's do a couple of things. Patrick, you good on your graphs?
Yep.
All right. Best sector right now. Let's do this. Let's go to Unisearch. Let's go. Let's go to Delta Search's sector. And let's go to 10-day RT Delta. Let's go see what's moving right now. That's a good question. Who just put that up there? That was Stephanie. What's the best moving sector right now over the last 2 weeks by our indicator relative timing? Let me tell you. Home, electronic, building, office. You know something? I'm going to probably talk about a lot of these tomorrow on Trending Thursday. Patrick may want to touch on some of these going into the mobile app tomorrow. But very quickly, if you're not a subscriber to the software, I can tell you what the best sectors are at any given time. And I'm looking over the last 2 trading weeks to give us a better perspective. So there you go. All right. I'm going to go back to the viewers. Let's go look at Glenn's pick. And again, all of mine is speculative. All of mine are speculative picks. They're starting to move up because the market's moving up. Let's go highlight them all. News driven. XROF is news driven, followed up with VEV, news driven. Palantir, news driven. NEO, news driven. And all of these stocks, with the exception of Vicinity's got a relative value above 1, but they're all sells. They all make money except for XROF. They all grow their earnings except for XROF. Damn it. And I own a lot of shares in
You're
XROF.
really putting a good plug in for Extra right now.
Shut up, because I own it. Now, I'm not trying to put in a good plug. They're losing money. I just said that. And I said that it was speculative. I'm not, and look, and it's way over freaking value.
Oh, man.
I am not putting in a good plug. It is news driven. That's what I said. That's what I said. I hate you, Patrick. I did say
blame Ray for this one.
I am blaming Ray every day for this pick. I hope he can hear me. Ray, I hope you can hear me. It's all his fault. All his fault. All right, so all of my plays are speculative plays, but stocks that I've definitely been keeping my eyes on for the most part. All right, so I'm not pushing nothing. I'm so not pushing nothing. But let's go take a look real quick.
Extra at least has the highest RT.
It does, because it's there. It is at 110, and that's not a lot. Let's go put this on a 3-month graph. I'm even going to keep I hate MACD, and I hate. What's the other thing you use besides MACD? Maybe it's just MACD.
I use stochastics from time to time.
Stochastics. I don't like that either. But Patrick is more.
Some people just don't like nice things, Glenn. It's okay. That's what makes the world go round.
Whatever. All right. So XROF, big down day. I won another bet with Ray. He said, "What do you think it's going to do today?" I said, "I think it's going to go down," and that it has. It's recovered, taken away a lot of the gains from yesterday. That's a big. It gapped up. It did gap up, and then it just gave it all back. So that's poopy. MACD is just it ain't doing nothing. But the stock did move yesterday on good volume, and RT is above 1, so stock's in an uptrend. If you look at the graph, though, it's all over the place. It's, I think I like it long term because I know what the company does, but I'm not going to tell you to try to trade it. Probably not. All right, Palantir. And this, I still think that this company's got so much potential, but if you look at the graph, you go, man, that stock is garbage. Sigh. I think that, again, more and more people need to understand what Palantir does. This company gets contract after hefty contract after contract after contract, and it's still not enough to push it up. We'll see what happens with it. I still want you to keep this on your mind. VEV, Vicinity Energy, I did see that you are here. There you are. Opening up Energy says Vicinity Motors be opening their factory soon. X-Rose sinking gap ups. I know. The one thing I do like about Vicinity Motors is the relative value. The stock's got good upside potential. I think that the news with X-Ro partnering up with this could have a good positive spin on it. The stock is trading at a 3-month low right now. Am I going to tell you to take it? No. Will I tell you to look at the 3 and the 8 on it? Yeah. Will I tell you also look at volume on it? Yeah. Remember, all my plays were speculative plays. NEO, 200,000 vehicle, 3 and the 8 just crossing. Volume is MACD looks like it's trying to cross over to go positive. Could be from a technical perspective, starting to move higher. But again, all my picks were speculative picks today. Wire is running. You bought it in Jockey. Oh, didn't we buy that? What count? We're not in Seminar 5, are we? No. I couldn't show you that anyway because not everybody here is in the Jockey Club. I wouldn't be showing you that anyway. Can you put us on just me and him? We're getting ready to end up. Hey, if this was good for you today for being here, means you're gonna have some words. We get out of here.
Talking about what food he's gonna eat next.
Wow. As you can see, we love having fun on doing what we do. Primary wave is up, is it? Let me check that real quick. Primary wave is up.
For right now.
Oh, man. Could this be setting up for our bottom fishing portfolio for tomorrow, Patrick?
We still got 45 minutes of the market being open.
Anything can happen. Anything can happen, folks. Patrick's out right on it. Anything can happen before the market closes today. All right. Patrick, you can close us out today. You can sign us off today.
All right. I'll do it here. Well, thank you once again, everybody, for tuning in, hanging out with us today. Hopefully you enjoyed the insight. If you did, as always, smash that like button, subscribe if you're not already subscribed. And also tomorrow we do have Training Thursday coming up at 2 p.m. Eastern tomorrow with Glenn, the guy next to me. Then also the mobile app coaching session. We've made some changes, updated some of our ETF pairs lists. So we're going to be talking about those and looking at those as well. If you want to hang out, come check those out, see what the new features are. That is at 11 a.m. over on our Facebook page and also our YouTube page. And if you subscribe, click on that notification bell. You'll get notified of when those sessions are, so you never have to miss out on those as well. So once again, thank you all for tuning in. Appreciate you guys being here. See you. Have a great rest of your day. And